No way, Cars for Coins coming. Dude, you're coming in right away. Before I talk about my next segment, what's up, dude? And you are coming in as a speaker right now, dude. Welcome aboard, man. You are in my streams like every freaking day, man. And I know you're the guy who sold Bitcoin, or no, you sold your car at 19,000 on Bitcoin or whatever to YOLO it into Bitcoin. What's up, man? Welcome aboard. Okay, waiting for your mic. I'll give you a chance to set that up. But there we go.
Yeah,
I think I
Kevin,
hear
I'm
you.
trying not to crash my car.
Hey, what's up, man? Twitter Spaces and driving. At least I'm assuming you're on autopilot.
Oh, yeah. By autopilot, I mean looking at my phone. No, Kevin, yes, I did sell my car for crypto, half Ethereum, half Bitcoin. I'm up 30%. So it was a 911 Turbo, so it's doing pretty well, up 30 grand. But,
Nice, dude.
you're an amazing channel. You've kept me through the bear market, kept my head on straight, and kept me buying stuff. I went all in on Coinbase at $33. So sold all my
Wow.
ETFs and went all in. So that's doing pretty well.
Wow, congratulations. That's amazing.
But
So clearly very bullish on crypto then, despite all of the regulatory drama, eh? That this is maybe the beginning of the end for the regulation drama?
well, it's an asymmetrical bet, right? When
Mm-hmm.
everything's low, the psychiatry tells you to sell. But if you're selling when everything's low, it's the opposite. So it's, am I bullish long term? Yes. I think anybody who has a long time frame wins. So
Yeah.
if you have a 2-3 year time frame, it lines up with both the rate cuts, which you just spoke about coming in March, and the Bitcoin halving, which is in April. And typically the peak is 1 year after. So if your investment horizon expands to 2025 and you're buying crypto now, safe projects, I think you're going to do very well. But I want to ask you, Kevin, do you think the Fed actually continues pausing this time, continues at the same rates, or they actually raise like the market expects? Because they've been doing whatever the market expects so far, right?
Yeah, well, it's a little bit of a chicken or egg problem. I'll answer that. Let me first say regarding your alignment, I think that's a phenomenal statement that you made. This idea of, I mean, think about an alignment of a low rate environment potentially again. In other words, rate cuts, inflation being gone, probably the economy not being in a recession, the Bitcoin halving, and maybe 2023 is the year of regulation hell, but maybe they finally figure it out. And by 2024, you get crypto ETFs, you get regulation, and you actually get these companies that are able to recover. So I think you're completely right. I think that is a phenomenal argument to make. And I think that's awesome that basically you were buying ETFs. And then at one point you decided, you know what, this is my time to strike, and you dumped those and you bought crypto. So congratulations. Regarding the Fed, so I call it a chicken or egg problem because as much as the Fed likes to say, oh, we just do what the market projects, we just like to follow the market. We don't want to surprise the market. The Fed creates the market essentially. They forecast, hey, you know what? We might be thinking 2 more rate hikes. Well, what do they do by saying that? By saying 2 or more even rate hikes, like what Jerome Powell did in Portugal, you guarantee 1 more rate hike. And that, I think, is what they were trying to do. They were trying to say, look, we went 25, or we went for a pause in June. We don't care that it is a historically stupid idea. I personally think this, to hike again after pausing. I think it's idiotic because you send this signal of the Fed being inconsistent or not, having this stop-start mentality. Their argument is, no, we're just trying to stretch out. That's the way they're selling it. We're trying to stretch out these rate hikes. But yeah, look, we're at like a 90% chance of getting this 25. After these 2 reports, we're still getting a reiteration from, well, at least yesterday. After all the Fed speak yesterday, after CPI, we're still getting a reiteration of the 25. So we're going to get the 25, but it will almost certainly be the last rate hike after the reports that we've gotten. So yeah, I do think we're still going to get to 25, even though I disagree with it, even though I think it's nonsense. We're going to get it.
Well, Kevin, you say half the inflation battle is managing expectations, right? So that's exactly what they're doing. They're managing expectations. They don't like your Nike swoosh recovery. They don't like these meme coins popping off like Pepe, which I do not recommend. But that's exactly what they're doing. They're just managing expectations. They want to keep things cool. They don't want to, mess up their their whole plan. Because if expectations get out of hand, people are like, okay, we're done. Let's all go in. Let's all buy Lambos. Then they're going to go back and do the whole, they're going to have to rug pull us, like you say.
Yeah, it's actually very interesting. They are so every single time they speak, they talk about how their biggest priority is making sure inflation is getting down, that too many people are hurting. And what they're doing by saying this is they're not actually talking to us in finance. They're talking to the regular American who's like, dude, everything is more expensive. Cheesecake Factory, the grocery store, everything's more expensive. The regular American doesn't understand disinflation versus deflation versus inflation. They don't understand that stuff. And that's fine. Let people be fearful. It makes it cheaper for us to buy the stocks we like, okay? It's just the way it is. Now, our schools don't educate people in finance. It's bad. We should, but we don't. So anyway, you've got most people who are completely clueless about this stuff. And you have a Fed that creates headlines almost every single time they have these rounds of Fed speak going, we're going to get inflation down. This is all we're going to do. We're going to keep going until we get it down. And really what they're doing is you're just massaging those expectations down. Because what they didn't do in the 70s was care about expectations. They didn't even pay attention to them until 1981 when they finally realized, and you can actually see this in transcript conversations amongst Fed members that, oh, wow, nothing we're doing is affecting expectations. Maybe that's why we still have inflation. And then it wasn't until you basically had Paul Volcker stand up and say, the number one enemy is inflation. We will crush inflation no matter what it takes. Now I'm going to align that with what I'm doing and raising rates. That's basically what the Fed is doing today. They're like, even though behind closed doors and to the finance folks, they're like, this is great. Like, this is Goldilocks. This is fantastic. Inflation's going down. We might avoid a recession. This is great. Publicly, they need to put on the face of, we will not stop until the job is done. Even though we're basically there. This is all expectation massaging. So you're 100% right with what you're saying. You start getting, like the more I hear people on social media leave me angry comments that are like, what do you mean, inflation is getting better and it's transitory? Everything's still expensive. Well, first of all, we know they fundamentally misunderstand inflation. But second of all, that is good. The more you have people like that, the less they're doing what you said and going out buying Lambos and borrowing to spend all their stuff. And don't get me wrong, people are still spending like crazy. But you're 100% right with what you're saying.
You know what's interesting? Expectations is also like the main thing of normal human relationships. It just goes back to normal psychology. Like anytime you upset your wife or piss off a friend, it's all about expectations, managing expectations. You either tell them you're going to do something, you don't do it, or you mess up, it's like I said, it just goes back to mismanaging expectations. But if you don't mind, can we jump back to the compliance thing with regulatory, with crypto?
Yeah, please.
It really seems to me from everything I'm hearing is that the main person that's holding back from actually putting forward regulation is Gary Gensler. And if you listen very closely to what he said during that CNBC interview, that's pretty famous, and you've called him out for that also, I appreciate it, is the one little thing he said is Coinbase is doing too much. So Coinbase is doing more than just trading crypto. They want a custody. They want to. They have the staking services, and they have the futures market now, and they have all these products. And it seems like Gary's really frustrated and confused, or at least using that as a scapegoat to not provide regulation because they're doing so many different things. And actually, yesterday he went on some meeting and he's actually given some feedback about the ETFs, saying that people called him out, say, hey, Coinbase is using, all these ETFs are using Coinbase for their, what is it, SAS? I'm not sure what that is. It's some kind
it's
of
like custody and everything, market making, custody. It's everything together.
Right. So he's saying that he doesn't trust Coinbase. He's saying that Coinbase is basically going to trade against you on the back end, and they're going to mess with you, and it's going to be bad for the consumer. So that's what he's saying. Meanwhile, a 2x leverage ETF is approved. Does that make sense, Kevin? So is leverage safer than a spot ETF? Not really.
No, you're right. So to break it down a little bit, what you have with Coinbase, with the leveraged ETFs, is you have futures ETFs that are leveraged, that are approved, and futures are really contracts. They're not actually Bitcoin. They're just papers. Like, you have to kind of think about it as like, hey, I'm sitting down, I make a handshake deal with you, and let's go trade this contract. Futures contracts have existed for everything, and there's a pretty clear path to getting those approved and then getting leveraged versions of those. When it comes to what you're talking about with Coinbase, it actually makes me think that it's entirely possible that if we get into this bull cycle here, you could actually see Coinbase end up having multiple mini IPOs, basically splitting the business into multiple different things. Think about how the main, like the traditional markets work today. You have an exchange, which I know initially when we hear exchange, it sounds complicated, but just think of an exchange as, like I always think of RuneScape. You go to the middle of the town square and you got a bunch of trading stalls and somebody's selling bread, and you walk up and you're like, yo, I want to buy some of your bread. How much is it? And you're like, oh, my bread's $5. And you're like, I'm going to walk over there and get the bread for, $4.90. I'm going to save myself 10 cents. That's a market. That's how we get price discovery, because we have individuals representing the market and participating in the market, participants. So we have an exchange, which, it's kind of like the vest I'm wearing here, the New York Stock Exchange. That's our traditional exchange. Then you've got market participants sitting on the floor, so floor brokers and market makers. They work price discovery. Then you have actual brokers who are like your Robinhood, that let you as a retail individual essentially get access to that marketplace, because you can't walk into that town square. You have to go through a broker. And basically what I've just shown you is 3 different levels here, right? The exchange, the market maker, price discovery, and then the broker. And then the brokers are custodying your assets as well. So you have these 3 different layers. With Coinbase, it's all in one. It's the exchange, the price discovery, and the broker all in one. And that's very different from traditional finance. And that leaves no precedent for the SEC and no rules from Congress. So you kind of have Gary Gensler, which obviously almost nobody in crypto likes, because, especially in that famous CNBC interview, he's talking about how, like, what do you mean digital dollar? We don't need that. We already have one, and it's called the dollar, right? That kind of makes people question his sincerity in general. Although I don't know if he meant to say that, but I mean, that's what he said. But anyway, look, it's going to be a rocky ride over the next year. I mean, we just heard about, what one of the executives over at Celsius getting arrested, and a new lawsuit against Celsius. So it'll be a lot of cleaning up. But once it's clean, it's gonna be great for crypto once it's all cleaned up.
Kevin, do you think the dollar is competing with Bitcoin?
I probably it's interesting because they're to some extent both somewhat speculative assets. I don't think that somebody who looks at Bitcoin as a digital gold would ever invest in the dollar. So that's not somebody who is a competitor. Somebody who doesn't like digital dollars would invest not in the dollar, they'd invest in just gold probably. So I don't think you have competition there. You certainly have competition for trading and speculation. 100% you have that. As far as a means of exchange, you probably have little reason to use Bitcoin at this point, unless you're using it as for an international means of exchange. And really, I'd say most of the speculation in the dollar today is based on how high rates will be. And given that we've had these 2-week inflation reports, you're seeing the dollar get piled on in terms of a short. The dollar really peaked around actually about a year from now, when inflation was at peak, because people thought rates would stay high for long. The higher rates are, the more people are attracted to buying our treasury bonds, because it's the safest instrument in the world, deemed risk-free, and people need to buy the dollar to be able to get access to those treasuries. So I think you have a lot of different competing purposes for the different assets. In fact, you have almost an opposite purpose to buy Bitcoin versus the dollar. Like, you go long Bitcoin when you short the dollar. So I suppose that would be an interesting way to maybe say there's some competition, but they're certainly not competing for the same thing in that regard. Because again, as rates fall, risk assets are going to go up, which is great for crypto, and the dollar is going to go down because yields are going down. So probably too hard to compare on a direct level. But look, if we just step back for a moment and say, is there a competition between the dollar and Bitcoin? I think when we look at it from the SEC level, yes, absolutely. Because that's where you literally had Gary Gensler say, what do we need basically digital currency for? We have digital currency. It's called the dollar, right? So on that level, there is.
I'd say that's where him and you are I don't want to say you're wrong, but there's a common misconception that Bitcoin wants to be a digital currency. First of all, it's not fast enough. Second of all, it's way too volatile. So I'm not going to hold Bitcoin in my business bank account and have employees to pay and overhead. So the whole idea that we don't need a digital currency, we have digital dollar, it just really pisses me off. And I apologize for my.
No, you should be pissed. And whether or not Bitcoin is seen as that actual digital currency replacement, I agree with you. That's not really the argument. I think more the argument is like, why is Gary saying that, right? Like, what really, why does he get to decide what really should be up to Congress, and Congress should be deciding and regulating what the people want. If people want different options for digital assets, then Congress should create a framework for that. It's really just Congress that's way behind here. Congress is ultimately the group or the institution that decides this. It's not going to be some judge that somehow magically figures out that digital assets belong and how to regulate them. Although that's just what the SEC is backed into because of all the fraud that's occurred. So they have to file these lawsuits to try to squeeze the industry to mitigate fraud and then hopefully spur Congress to regulate. That's at least my thesis on what's going on. But I agree with you on 2024.
There are laws in queue. There are Toomey, I think Pat Toomey and some other Loomis are working on bills that are already presented and they're still working on them. But to go back just one more thing, from my experience, we have sold cars for crypto in the bull market. Right now, nobody's doing that. They're selling cars. But what really happens in the functional usage of crypto is people speculate on Bitcoin. So they'll use the dollars to buy Bitcoin. They'll use the dollars to buy Ethereum and, more risky, low cap coins. And then they're going to cash out into USDC, which is a Circle product, also heavily tied to Coinbase. So for me, I see USDC as the digital currency that's competing with the dollar that can actually become a CBDC in the future. And that's built on Ethereum. Why I love Ethereum. So practically speaking, to say that we don't need a digital dollar is competing with Bitcoin, I'm sorry, is just crazy. Like I said, like you buy very, very speculative, highly volatile Bitcoin so that with dollars, so they can later put into USDC and then you can send it overseas or buy a car or whatever with it. And that's the actual practical use of crypto, is that you're putting into stable coins. So number one has got to start with stablecoin regulation, which is the first step. If I'm holding USDC, like my plan, 2025, I'm cashing out 90% into USDC, paying my taxes, long-term capital gains, and then I'm going to go back in when it crashes by 50, 60% again in 26 and retire in 2030. But like you said, it starts with regulation, and that's what Coinbase wants, and eventually they're going to get it. And it's going to be a beautiful thing. So I appreciate your time, Kevin. Thank you.
Yeah, absolutely. And I completely agree with you, by the way. I'm a big fan of stablecoins to the extent that they have transparency. And I think that's what regulation will bring, because right now, we don't know still today how, obviously we've seen the ramifications of it, but the amount of leverage on the CBDCs, not the CBDCs because we don't have those yet, on stablecoins is obviously an issue. This is where we get the rehypothecation that took down BlockFi and Voyager, which was literally what we had the CEOs on, and I asked them about it. I go, there's got to be so much risk in these stablecoins. Like, I'm personally still so frustrated. I'm looking back and like, give us transparency on the stablecoins.
Right.
Like, I want to like stablecoins, but there's no way you're offering 9% without all this crazy rehypothecation. They're like, don't worry, we have safeguards in place. Yeah. Oops. Just give it all to Three Arrows Capital was the safeguard.
Trust me, bro.
So yeah,
Trust me, bro.
True transparency there in a real functional stablecoin. I'm all in.
Yep. And no, I don't trust Tether, just for the record.
Nice. That's awesome. Dude, this has been amazing. Thank you so much, man.
Thank you, Kevin. I'll hop on anytime you want. Thank you.
Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced by